Hi everyone and welcome to today's morning report on Friday the 4th of December with me, Rich Pro Market Analyst at Hentech Markets. It is ECB day and the market is still trading on the legacy, to be honest, of this big shock yesterday at the ECB announcement of the monetary policy. Big disappointment for the market, shot the euro higher. The dollar had an absolutely dreadful day. Let's just show you the dollar. Massive sell-off on the dollar. The big question, I suppose, is does this make a significant change in the outlook? Well, against the euro, yes, there has been a significant sort of turnaround, but I would argue, and I'm going to show you through my charts, that pretty much against everything else, there's no real change to the dollar strength angle. So it's interesting that we're seeing these moves, but just at the moment, the euro is actually correcting some of that move that it saw yesterday, and obviously that is seeing this dollar index quite nicely higher. But the dollar pretty much across the board is having a decent day in response to obviously yesterday's weakness. It is Non-farm Payrolls day, so there's going to be lots more volatility this afternoon. Non-farm Payrolls at 1:30. Let me just show you the charts. So that's Non-farm Payrolls over the course of the past few years. It's expected to come in at 200,000, which, to be honest, I think the market is just looking for a solid payrolls report. And a solid payrolls report would pretty much cement in the expectations of a Fed rate hike in a couple of weeks' time. So a solid payrolls report would be 200,000 on the payrolls report, with payrolls headline, which is the expectation, 5% on the unemployment level, which is the same as last month. Participation rate will be interesting. 62.4 continues to fall away, so that is not a good sign. But still, the Fed seems to be sort of looking past that at the moment, and also average hourly earnings, which, to be honest, last month were very strong. They're expected this month to come in at plus 0.2 for the month, which actually equates to around about 2.2% for the year. So it's still not really majorly picking up, although there has been signs of a slight improvement in recent months as a general trend. Generally around that payrolls report you will get a lot of volatility, and I think that will be again the same case today. My chart of the day is the silver price. Now, silver has been falling away in the past few days, really, on a net basis. Certainly you can see that with this downtrend I've drawn in. Yesterday we had this technical rally intraday on that dollar weakness, but we actually saw a move to 13.79, which is in fact a big new low on an intraday basis. You can go back a long way to sort of 2000 and 2009 on that silver price last time it was down at these levels. So the fact is that the silver traders are testing these new levels, and it certainly looks as though I think these indicators here are they're not, in my opinion, calling a technical rally. I think they're just unwinding this oversold momentum. You're not really seeing strong momentum, strong improvement. You're seeing sort of like a drift improvement, which generally I think is sort of indicative of a market that is sort of just unwinding, really, rather than going to be engaging in a serious recovery. So I think that the technical momentum signals would suggest that the downside potential is being renewed by this move, and I think that rallies are a chance to sell on this silver price. And that, I think, is going to be seen. You've still got these, as I said, with that downtrend, you've still got the sequence of lower highs. You've got that rally yesterday that hit 14.17 underneath sort of this sort of band of resistance around 14.20 that you saw last few days. 14.25 was the spike high, but generally speaking, between 14.20 14.25 is that resistance. So you'd need to see a break probably above that 14.38 level really to start. Sorry, that was the wrong way. To really start thinking, well, this is a recovery. So until you see that, I don't really think that you can do anything other than sell into strength on this silver price. You've seen the hourly momentum unwind back towards that sort of 60 level, which is around about where the rallies in recent days, or certainly in the last week and a half, has sort of failed. Stochastics and MACD lines have already turned over that MACD crossover last one worked pretty well, didn't it? Last few have actually worked pretty well on the MACD lines, that crossover. So that crossover has happened now, and the stochastics have crossed and fallen away. So pretty much it would suggest that this little rally is sort of running out of steam, and I think that it could be that we're going to see the sellers coming back in again and pushing lower, pushing back towards that reaction low that we saw yesterday, 1379. Don't forget you've got a lot of volatility with the payrolls report today, so a weak payrolls report would support the silver price. The big overhead resistance coming in around 1440, as I said previously, but if payrolls are pretty much in line or better, then I think you're going to see weakness on that silver price. So I wish you good luck in your trading today, and I will speak to you later. I think.